It's important to take a moment and get some perspective. This graph is so warped, so blown out of scale, that every number that isn't this one feels like a colossal failure. But every time that Nortel has fallen down in the past, its stock has climbed its way back up. Think about how the people who bought the dip in 1993 feel now. If you bought here, Jean Monty quadrupled your shares by the time he left. And if you bought the dip in 98, John Roth multiplied your shares by 9 times. Do you still doubt it? Are you going to miss out again? Individual investors loaded up again. Pension plans loaded up. Nortel was nothing if not resilient. You couldn't say the same for Lucent, who'd spent much of their fourth quarter of 2000 stepping on a bunch of rakes. They revised their earning predictions twice, down from 24 to 18 cents per share, losing them almost $8 from their stock price. Because of this, CEO Richard McGinn was fired by the board. Then on November 21st, they admitted that they overstated their sales by $125 million, lopping another 2 cents per share from their targets. Can you imagine that? You have thousands of accountants and you can't even get your own numbers right? Embarrassing. Since late September, it had lost 56% of its value, dragging down Nortel and Cisco with it. During the same period, Nortel was down 48% and Cisco 36%. It was bad news for all telecom companies, but Lucent had fallen a long way since their record-setting IPO. It had tried to grow too much, too fast. All those companies it had gobbled up to compete with Nortel and Cisco were being ejected again. It had spun off 2 major divisions as Avaya and Azure Systems. Nortel was smugly watching by as Lucent tripped over its own feet. If this was still a race, it was now only between Nortel and Cisco. On November 30th, John Roth was given the honor of ringing the bell that signaled the start of the trading day on Wall Street. Although it tends to be an honor given to American CEOs, that day it was Nortel's 25th anniversary of being listed on Wall Street. John Roth gave a speech later that day, and given the circumstances, he was well within his rights to be a little petty. Quote, "We grew 40% this year. We'll grow 30 to 35% next year. A lot of people would like to have that problem. Nortel does not have a problem." This infamous quote would haunt Nortel for years to come. By the end of December, John Roth had been awarded Canadian Newsmaker of the Year, as well as Canadian CEO of the Year. The stock recovered over the holidays thanks to an overall market rally in the new year, and it seemed that Paul Sagawa's prophecy of disaster had been oversold. But then, Cisco blinked. In January, CEO John Chambers had finally spoken into existence the words that every investor feared. Quote, "Is the economy slowing? Absolutely. For Cisco, the first quarter of 2001 was going to be, quote, a little more challenging." Cisco wasn't ringing any alarm bells yet, but it was clear that they weren't going to promise the moon either. But on February 6th, Cisco completely throws in the towel. It announced to investors that it would be earning 1 cent less per share than initially predicted. Their stock price is pummeled and loses 20% in just a few days. By April, they'll be down by half. Meanwhile, in the background, Nortel had just quietly cut 4,000 jobs. There is no official public statement. It's not until January 10th that the media hears rumors of job losses at Nortel, at which point Nortel unleashes a PR offensive. Any sales deal or new customer was broadcasted by the PR team. Didn't matter how small the deal was, any good news was championed like a monumental saving grace. To quote analyst Ross Healy, it was like the Hudson's Bay Company reporting the sale of every 31-inch television set. There was so much good news pouring out that bad news had no room to breathe. Then for good measure, a Nortel spokesperson says the reporting of layoffs is exaggerated. You see, they're cutting jobs in slower divisions so that they can hire more in faster growing divisions. If you think about it, by the end of the year, we'll have hired back the same number of people. Those aren't layoffs, that's just strategic reallocation. Sales are slowing down in the optical division. Frank is momentarily shaken. Then he lets other people speak. Wireless, it's going down. Enterprise, down. Everything is going down. Quest, MCI, all of their customers that had promised a certain amount of business were now having to cancel orders because they lacked the money. Most of those deals had been done using vendor financing. Nortel promised deep discounts and loans in exchange for their business, but they couldn't even pay for those. And yet Nortel had already recorded those as sales even though they hadn't been paid for yet. Nortel switches were sitting in warehouses, still on the pallets they were delivered on, with nowhere to go. By some estimates, these heavy-duty fiber networks were only supporting 7 to 14% of their total capacity. There just wasn't enough internet activity to warrant the existing orders, much less any new ones. Nortel was about to drive off a cliff. Scratch that, they had run off the cliff months ago. This was the moment where Wile E. Coyote looks down and he realizes he's about to fall. Stunned silence in the boardroom. How had they missed this? How had no one seen this coming? In reality, lower-level managers in Nortel had known about this problem for months. In San Diego, September 2000, Tim Dempsey, an HR exec, was running a leadership workshop. All of the managers are pulling him towards their table and begging him to listen. You gotta tell John. Tell John what exactly? The marketing numbers aren't real. What's fake exactly? Peel the layers and you'll see that the assumptions are that end users will buy networks from each of our customers. End users only need one network each. All the numbers are inflated. These warnings never made it to John. Instead, they were suffocated by the rigid bureaucracy of the management hierarchy. John Roth had surrounded himself and stuffed the board with yes men. While he was busy telling investors what they wanted to hear, his own executives were doing the same to him. Dave House, the former CEO of Bay Networks, only stuck around at Nortel for about a year before he left. But after just 6 weeks, he shared with Tim Dempsey his opinion on the rot that infected Nortel. I have never seen a bigger group of liars in my life. I am astounded that you don't tell each other the truth. There's a culture here to lie to each other, to protect your turf, to protect your ego, to protect your business, to protect your customer relationships. To protect what? I don't know. But you don't tell each other the truth. In this moment, Frank Dunn doesn't understand all this. He just knows he has to make a phone call. John Roth is not in the building. He's not even on the same continent. John Roth would later describe his shock at the news as comparable to when he first heard about the attack on the World Trade Center later that year. A press release was being drafted, and it would go public in a little over a week. On February 8th, Nortel's CTO William Ha abruptly leaves, cashing in his stock options, although mostly at a loss. He sees the writing on the wall. Soon, Don Smith, president of Optical Internet Solutions, also leaves. Nortel won't publicly mention these departures until a week later. On February 15th, it seems like just another trading day on Wall Street. The regular trading day ends without incident at 4 p.m. Just minutes after the closing bell, though, internet trading forums start going berserk. They've just been fucked. Nortel has issued a press release, and they've changed their forecast. Nortel was not going to hit its target. That much was clear. When Nortel missed their earnings by just 1 cent per share last October, they lost 25% of their stock price in one day. When Cisco missed their earnings by 1 cent per share, the market slaughtered them. And of course, Lucent had their traumatic fall from grace when they had to lop off 2 cents per share, and their stock was nearly cut in half. The question was, where in this range will Nortel's correction be? Nortel's original target was earnings of 16 cents per share. And this was their correction.